Inflation, inflation, inflation. That's what's on investors' mind nowadays. And looking at May 2022, US inflation rate is at 8.6%, and that's the highest in 40 years. So a lot of people are concerned about if this inflation going to go higher, and should investors hedge their position by buying some commodity related stocks or instruments such that, you can make some gains from there to offset some of the inflation pressures from there. Based on my observation, and I have been long commodities since last year, and I noticed something unusual recently. In fact, I have sold all my commodity positions, and I want to share with you why I think that inflation might have peaked, at least in the short term. So I'm Melvin, I see your Dr. Wealth. Let's go to the charts now. Okay, let's start with the oil price chart. So this is the oil price chart as is using the ETF, the USO, United States Oil Fund, as a representative of what the oil price is looking at. So the USO has been rising. You can see in the past 1 year or so, the prices have been rising up, and it's very good for those trend traders. And yes, there were some dings and correction over there, but the general uptrend is still there. But recently we saw this correction, and in fact, it has become more volatile since March. And it has gone up, down before it has sort of like an exhaustion kind of price reaction. So the way I see it is that usually when prices are near the top, they tend to be more volatile and they start to range bound a lot more. I'm not saying that it is definitely going to have a reversal that's going to happen, right? Oil price is going to go down, but I'm just saying that the signal is there. And later we'll look at more other commodity related stocks and why a lot of them are more bearish than what people think it is. Okay, so this is all. It's still not that bad because at least the prices are staying above the moving average. So I have a blue line over here. This is a 100-day moving average. The red line is a 200-day moving average. So at least the prices are way above. And the only thing that if you want to nitpick is the momentum has actually gone down. Right, this is a momentum indicator that I use. So around 47% is reasonable, but it's not having very strong momentum at this point in time. And let's look at the natural gas, which is tracked by this UNG, another ETF. And we can see this is a very steep drawdown, right? This is unlike the oil price that we saw just now. So natural gas is a lot weaker than what it is compared to the oil, right? And it's fallen below the 100-day moving average. So that is essentially a sell point for me, right? I didn't have this ETF. I do have oil and gas stocks, but if I have this, I would have sold it because the price have gone below the moving average, and that is one of a bearish sign. Of course, price can rebound and go higher, right? But you always want to play safe because it can go down a lot, and then you might incur a very big loss, which is very hard to recover from. So there's an idea of trend following or momentum trading. And yes, if let's say it rebounds, no harm going in later, right? When the momentum comes back again. Okay, but at this point, it looks more bearish than bullish. The next one is the energy sector ETF, and similar to the natural gas, right? You can see the prices are firmly below the 100-day moving average. Will it rebound? I would say that it's harder because if you compare this drawdown as with the previous correction, this is a much steeper and a deeper one. And usually when price go down a lot more, it takes a lot more energy to come back and push the prices up. So definitely I'm more bearish than bullish when it comes to the energy stocks. And we can see the individual energy stocks like this Chevron, right, is also below. In fact, it looks like it's nearing the 200-day moving average, testing it. And this is ConocoPhillips similarly, right? So there's a lot of similar patterns that we can see among these commodity stocks, and they are starting to look more bearish than bullish. And this is EQNR, Equinor, which is a Norwegian-based oil and gas company. And it has momentarily went below the 100-day moving average, and it managed to rebound, but you see another big red bar. Okay, so there's a lot of selling pressure that's happening right now, and the momentum is very low at 2.45%. In terms of the exponential regression, this is something that suggests the momentum has lost. And we look at some Middle East index because they are the barometer for the oil market as well, right? Because they're major oil exporters, the majority of revenue derived from selling oil. And this is Saudi Arabia ETF. You can see the index is even below the 200-day moving average. They should be making a fortune right now, but the index is suggesting otherwise, right? The the production maybe is not able to keep up to really maximize the advantage, and maybe it's also a signal that oil prices might be falling as well. So we don't know what is what, but the price action tells us that the Middle East indices, the Middle East countries' oil stocks are not doing well too. This is UAE, right? It's also below 200-day moving average. It's even more bearish than the energy stocks that we see in the US. And this is Qatar, right? And it's also below 200-day moving average. And even World Cup that's going to happen in the end of 2022 in Qatar is not helping them either. And this is next one. We look at grains, right? Agriculture, and agricultural products like wheat, corn, were doing very well, right? Doing very well in the sense that prices are going up due to the war in Ukraine and Russia. They are major exporters of these grains, and this is a Teucrium Agricultural Fund, or TAGS as a ticker. So they track these grains, and you can see that it has also have a sell signal, right? The prices has gone below the 100-day moving average, so it also suggests that the grains prices are moderating. And this is specifically corn, right, below 100-day moving average, and this is wheat that is also below 100-day moving average with very low momentum to couple with that. So signs are showing that prices are falling, not rising at this point in time, even though we look at the inflation rate is still high. And this is ADM, Archer Daniels Midland. This is a commodity trader, and momentarily went below 200-day moving average, bounced up a bit, but likely it should resume the downtrend again, right? Even in fact, the momentum is negative now. Okay, so we have a lot of evidence that shows that the prices of commodities are coming down instead of going up. And this CF industry, they do fertilizers, right, which is related to agriculture, related to a lot of food products that's grown from the soil. And you can see that the prices have gone below 100-day moving average. Next one will be metals, right? I will use PICK, P-I-C-K as the ticker, which is an ETF that tracks the metals and mining producers. And this is one of the first bearish commodity counter that I saw that actually went below the moving average way before everybody else, right? And metals are related to production, industry, and things like that, and that may suggest to us that the recession is looming, right? And the inflation may be brought under control. So that is for metals, right? Way below 200-day moving average. And gold tends to do better when inflation rate is very, very high, right? But instead of going up briefly, it actually, after it went up, it just came all the way down below 100-day moving average, below the 200-day moving average, even below a long-term trend line that I drew over here, right? So gold is actually very bearish. And if we flip the logic to the opposite side, right, that means that if gold is going down, it suggests that hyperinflation or super high inflation is unlikely to happen, right? Otherwise, gold would have stayed a lot higher than what it is today. And we also look at some shipping stocks, right? Shipping stocks is also related to commodities because a lot of commodities are shipped all around the world, as well as production, right? Trade between countries. And you can see the prices of shipping companies like Eagle Bulk Shipping has gone down significantly, right? Below 100-day moving average, testing the 200-day. And likely I see the way it is behaving is possible to go below the 200-day moving average as well. And this is Safe Bulkers, another shipping company, also below 200-day. And this is Genco Shipping, is at least it stay above 200, but it's also below the 100-day moving average, which is a sell signal as well. So you can see many of these commodity stocks are being told, by the signals to sell, right? It is very unlike the picture that we see in our daily lives that prices are going up, inflation is high, but all these stocks are showing that they are likely that inflation's are going to peak because stock market is a leading indicator to a lot of economic numbers, right? So the stock market will move first before we see it in the economic indicators, right? So now we see that the prices are falling, which means that in the next few months, what I believe is that inflation is going to remain high, but it is unlikely to go up much higher, right? We might be lucky to see even some lower inflation rate in the next few months, right? But I don't expect it to go down a lot, okay? But I do see that we should see some stabilized prices at this point in time, right? If this stock market indicator is right, Okay, so that is my view, right? You may agree or disagree. Leave your views in the comments, and we can talk about it, right? But I do think that at least momentarily in the next few months, inflation should be stabilizing. And if let's say the inflation or the prices come back up again, right, and momentum come back again, I have no qualms going long on commodities. But right now, I have fully exited from all these commodities counters, and I just want to share with you, right, so what's happening in the market. Maybe that can help you make your investment decision a lot better, right? So that is what I'm going to share. Remember to like this video and subscribe to our channel, and I'll see you around. Goodbye.